Tori, you go to see?
Hello. All right. So today I just want to go over our trade that we did. Oh, there's some profits. Cool. I forgot to close this trade. So I want to go over this trade that we took, and what happened really, and how we entered this and how we got out of it. And
Fuck, I don't know nothing about this forex shit. Yeah, I'm trying to figure out about the stock market for tomorrow.
so you came to the wrong place, and you can leave if you want. No one's forcing you to be here, man. You know, more than welcome to leave. By the way, the stuff that I'm teaching here, you can use in any market. It doesn't have to be just Forex. But okay, I'm gonna start going here for people who actually do want to watch. You're more than welcome to leave. Actually, I want you to leave. Bye. Okay. Right. So let's basically go over today's trade. Why we entered it and what we could have done better, and also go over basically basic liquidity and stuff that I want to go over with you guys.
No, but fuck that. Get your ass in there.
All right. Yeah, I'm gonna mute you, man. I'm sorry, bro. You're really loud. All right. All right. Let's just let me start here. All right. So basically, we entered this trade at this line, at this break. We actually entered right here. We saw this creek being formed, right? So we had a manipulation of this trend line that that retail was seeing. So people were selling here, including us. We actually did believe this would be a sell position as liquidity was building on the top side. What is this? Sorry, didn't realize my volume was on. No, you're good. Just there's people trying to watch that are trying to learn as well. I wonder where's Dory's here. She's not. Okay, her loss. Anyways, okay, let's continue with the class. So yes, we had this. This is actually I want you guys to focus your attention on this. And the rude viewer we had earlier, who was like, oh fuck Forex, whatever. First of all, I don't think he's that intelligent, because the stuff that I'm teaching you here, just because it happens to be the Forex market doesn't mean that this isn't valid for stocks. I don't want to go as far and say that everything you guys know is wrong, but I am going to say that, because if you guys are using like RSI, or if you guys are using any of the indicators that I'm about to list, please write it in the chat right here, right? Like, yes, I use it. If you guys use RSI, overbought, oversold, if you guys use MACD, if you guys are using any of those indicators, you guys are using trend line, fib levels, right? If you guys are using any of those types of indications, then this is going to be very useful to you. And again, I know that fuck Forex and whatever. First of all, you don't know anything and you can make a lot of money with this. And besides that, this works for any market. Futures, crypto.
Hey, quick question.
Yes.
What is like the best stock to invest like for beginners?
Again, this is a Forex class.
Oh,
I'm teaching you how to read charts. It doesn't have to be necessarily Forex, but if you're looking to trade stocks, yeah, that's not really my specialty. I'm more into like chart analysis for anything. I can look at a ticker if you want. If you guys want me to look at tickers, I can also analyze those for you as well, using smart money. But generally I specialize in Forex. Just so you guys know about me, I've been trading Forex for almost a year now. I've actually been pretty profitable in the last few months, so that's why they added me to the group, because I actually have some nice calls, and I actually want to go over that stuff with you today. So yeah, if you want, I can look at tickers, you can send them, but in terms of like stocks, I'm not the guy to ask. I can give you like my ideas, but I wouldn't listen to me, I wouldn't listen to me on that. Guys, just listen for a while and then formulate your question, bro. New people, they start taking questions. All right, for sure. I don't want to be mean and be like, oh, you can't ask anything, but he also has a point there too. But okay, basically, yeah, I'm just gonna continue with the lesson, and I hope you guys can actually learn something from this, and you guys can use this in stocks, because like I said, again, the competent man, the almighty broker, the guy who's controlling your trades and stopping you out, he exists in many different shapes and sizes and forms. He exists in Wall Street, in the stock market, as hedge funds, as banks, JP Morgan Chase, Bank of America. These are huge liquidity players. You think that they trade like the rest of us? They have analysts on Wall Street that they take from Yale and Harvard, the top kids they take to their investment banking. So you're trading against the algorithms, you're trading against the big banks. So you need to learn how to trade like them, because if you're not, you're gonna guaranteed lose every time. That I can promise you. So now I want to go over this accumulation that we had, which was actually an accumulation, right, that we had here, which turned into a distribution. So I want to talk about how we could have really used and utilized this situation, and how we could have seen this and actually gotten involved on these larger moves down. Even up here, we could have gotten involved. And I really want to show this to you guys. And hopefully the guy who said fuck Forex, I only care about stocks, hopefully you actually learn something, and maybe you can, you may even try Forex for a while. Maybe I can convince you.
Flush that.
What's that? I don't know what you just said about it. Okay, I don't really care. Anyways, right, so we had this accumulation, right? And this can be seen by the fact that we had this sell, right? This final leg of price. We had the selling climax, the automatic rally, secondary test, the move up, the up thrust. The UTAD right here with the secondary test coming back down for this final. We never really got a spring move, so this wasn't really a normal accumulation. It was kind of a quick and abrupt on the 1 minute accumulation as price began to start shooting up. And now usually you can tell when there's a creek by the low volume. As we started to lower down in volume, right, this was a slow and steady move down, right, trapping people in this trend line. Right, people were like, oh, you know what, this is moving down, let's take a sell, right? And they took sells, only for the market to then come, grab, and purge violently. Look at these candles moved, right? Look how fast that was. 1, 2, just started moving up against the overall declining trend, came, grabbed all the stop orders that people had up here, right? Because let's say, you know, I don't want to be mean and say you guys are dumb, but usually, retail traders are called dumb money in the space. So I'm not saying you guys are stupid, but you know, dumb money places their stops above, you know, that's the retail logic, is to put your stops above the last high, right? So people are placing their stops above here. So we know that because of these grabs of liquidity, there exists a liquidity pool right above these two all-time highs, right? And in terms of not all-time highs, you know what I mean? Like in the market structure, these were the high points. Don't look at this, right? Look at this. Look what we're seeing. This is what we're seeing, not what we think. We're seeing that these are the ultimate highs, right? These are almost equal highs. So we're seeing a declining trend. But when we know that the volume is low on this declining trend, what does that mean? That means that price is failing to move down and mark down significantly. And then now the move is actually up to purge that liquidity, right? We were not actually awake during this time. Actually, no, yeah, we were awake here. Here we were awake, but we didn't enter this trade yet. We were waiting for this creek to finish to grab that liquidity, and then we got involved. What is this? What time is that? 1 hour candle? No, this is on the 1 minute. I'm misexplaining it because the 1 minute is just my opinion, right? Obviously, I think it's the best time frame, and I'll explain why. Okay, yeah. I think it's the best time frame very simply because you just see everything happen before it does. And on the 15, the 5 minute, you just can't see like the 1 minute. If anything, I wish I could go down even lower on the 1 second, but that's for the Pro Plus. I don't want to pay like $60 a month. It's not worth it for me. Let's see who's talking. Maybe it can be done. Okay, never mind. So yeah, so we had basically this move up, right? Like I said, to grab that liquidity that we had up here. And what happened once we moved up? We what is this? We I switched between the one. Okay, yeah, that's what I do too. But you also want to check the higher time frames as well for confirmations. So right, we grab this liquidity, and now here, this is the order block. Here is where the order to take market down after this liquidity was purged was placed. So really, in fact, this looked like an accumulation, but this is called a bear trap. And even smart money can get confused here, right? Because this is a smart money setup. But here's the thing, the Wyckoff, right? The accumulation scenario never happened, which is a sign of a very problematic sign, because we never got that spring move that stopped out the money to grab their orders and then proceed up. We never got that. And by the way, disregard this trade. I'm just leaving it up here to show you the trade that we took. This is a demo account trade. So we already took our profits very, very long ago. So yeah, the 113 is not relevant anymore because now the market's going back up. Don't look at it. Okay. So We didn't have that accumulation scenario or schematic occur. So we didn't enter this market. We waited for this creek to finish. We saw this move up and we entered at this low. Now the market broke down and we were in these cells really all day. Actually from here, we really sold from this move. We really entered the beginning of this move down. So like, you know, whoever was in the live stream with me today and actually caught this, I think, is he in the call? Oh yeah, Marcos was in the call with me today and he saw this trade actually occur live and how we broke it down. Can you show me an example of an accumulation and beat trap? I don't know what a beat trap is, but I'm assuming you mean bear trap. I'm joking. Yeah, obviously. I can show you. It's not an issue, but what is this? Yeah, I was joking, obviously. But yeah, Marcos actually saw this trade live today, and it was a very beautiful and easy trade. We saw this. We saw that the higher time frame was demanding lower prices. We saw that this liquidity that we had over here, I'm going to show you that in a second. We had liquidity vacuums that needed to get filled. We had this overall move down, this accumulation that occurred, which actually looked like an accumulation. And I actually thought prices were going to be met higher. I was a little bit scared, but I said, no, I think this is actually a redistribution as price made the mark down. We actually, we posted this in the Forex analysis. You guys can look at that if you want. What is this? Reversal kind of. It's not a reversal. It's a continuation of trend. It's an accumulation of prices before the mark down. We got the mark down, right, with this really significant low. We again got a shooting up of price. It was at this point here that we took our profits. By the way, this whole move down and now the market's just kind of in this like disgusting trend, manipulation, move up. The market's now bound to start filling up this liquidity. This trade was done. I just wanted to show you where we entered, where our stop loss was. We can close the trade. Again, this was a demo trade. This isn't real money that was on the line. This trade that I just had up open here was not a real trade. So the main move was actually from this that we actually did end up catching. I can actually read to you what the exact entry was. I don't think it really matters. And we actually ended up catching all the way down here at 79,295. So we made around what was that, like I think, yeah, like 30 pips today, which is amazing. And I was using a 1.5 lot size. So this was around 4% of my account. So that's like $400. This whole move down took us around 2 hours since we entered, which I mean is, I guess it's like kind of slow, but I mean, if you had a bigger lot size and you caught this move, if you were trading like, let's say $1,000 risk, you would have made $4,000. Wow. And, you know, you can get the idea, right? And if you traded $10,000, this move would have made you 40,000, right? You guys understand. It's just 4 times. This was a 4 risk reward. So whatever you made, you would have made times 4. So I happened to put in 100 and I made $400, right? So that was that trade. And then, you know, we just came back up and here's the thing. We never actually got a reversal pattern. Maybe on the 1 second time frame, this could have been a mini Wyckoff. We had them move down, Powers Comex, automatic rally, secondary test, maybe a spring move somewhere. I don't really see it. I actually didn't recognize this as a Wyckoff. So I didn't actually see that reaccumulation or sorry, not reaccumulation, the accumulation model schematic occur. We never actually got that. So I don't know what yeah, okay, I'll show you in a second. Please be patient. I said I'll show you. So we had this move down, right? And I guess, you know, using hindsight, I don't like, you know, being a hindsight trader because, like, you know, it's cheap, you know, it's always easy to look back in the market. But I'm just telling you in lifetime, looking back, I guess from my own notes, when you see a pin bar with such a significant rejection, you know, I guess I just thought that, you know, we would be going like here, right? We would be going up a little bit before continuing the mark down because we did have, I'm actually going to go on a 5-minute or 15-minute to show you the liquidity fill that we expected. So basically price was making a run for this liquidity that we had down here. And I was expecting for us to get maybe some lower prices and eventually fill in this liquidity. Now on the 15-minute, we're seeing this is also an up thrust. This potentially can now bring down price even lower and start, wow, actually price is really moving up. maybe we might end up trading this. Although today I'm not really feeling like taking a trade at night. I kind of want to get a good night's sleep tonight, so I'm not actually going to take any trades. Yesterday, we actually took a trade that was actually very profitable on the stream. I actually called it out and did everything while in class. But yeah, today I'm not doing that. But yeah, we did expect this market to really come down and fill this imbalance. I guess we never got that because we want price to stay in this equilibrium state of around 79,500, which is also a psychological number. That's where price kind of wants to reside at, this general area. And this markup was allowing us to fill in this area, which on the higher time frame could actually be in reaccumulation or a distribution. Although if you look at it technically, this could have been the spring move, with this being the bearish climax, automatic rally, secondary test, up thrust, sign of weakness, sign of strength, secondary test, creek, manipulation of the creek, the move down, giving us an ultimate spring, leading us to a mini accumulation instead of smaller time frames, now giving us higher demand prices, potentially being priced up even higher. This is also, so there's Wyckoff inside of Wyckoff inside of Wyckoff inside of Wyckoff, and even this was a schematic right here. So you're starting to see that the market is broken down to cycles of accumulation, distribution, reaccumulation, redistribution, and this is working. Again, for the guy who said fuck Forex, this works on any market. So yeah, I guess it sucks to not know anything, but it's okay. I'm here to teach you regardless, even though you were very rude to me, which I don't appreciate. I'm sorry I'm late. Congrats on your trade today. Yeah, Dory, I wanted you to be part of it, but this is recorded, so you can watch it after. And on Thursday, we're gonna go break down everything, me and you. But anyways, moving forward, that was basically today's trade breaking down. Let's go back on the 1 minute. So basically what I was trying to show you was that, yeah, even though we never got that fill like we expected, I guess that there was no way that you could anticipate this would have been a reversal of price. I started seeing it really reverse out of kind of nowhere. Like this was the absolute bottom, 294 or 295 rather, sorry. And it just started to just really take off with no really warning. There was no way you could have anticipated, I actually closed at 2.5% instead of 4% like I wanted. So we only closed almost a little bit more than half of what we could have made. So instead of 400, we only closed like 250, which kind of sucks. But that's my fault for being too greedy. I guess I should have taken the 400 and been like, thank you market, and call it a day. But it's not a big deal. I still closed green. I'm not really complaining. But regardless of that, I did want you guys to understand how we actually played this move out. It was actually, looking back, very easy. I just used higher time frame confirmation. I used monthlies to determine bias, and we just called this move down because we just saw that this liquidity needed to get filled. We saw this creek. We saw all these lines, stuff lining up. We know the lower volume, the sudden increase in price to grab liquidity. The ultimate moves down, the continuation of those moves, the continuation of that move, and then we had a sort of little bit of a redistribution to grab this liquidity to then actually distribute a little bit lower, and then at that point it just kind of stayed in this consolidating range, which again, look at this stuff. This is what we spoke about yesterday. This is called market manipulation. This is how the broker fucks with you. This is where spreads are like 20 pips where you can't trade in, and it's just actually terrible, like disgusting. You cannot trade during these times. And if you look at the time, it's between the hours of 5, so just when the market closes, and between 5 to 6 is an untradeable hour. This hour is untradeable. I strongly recommend you for not to enter the market, and this is just the reason why. Now, again, I can show you some tickers of stocks that I can do the exact same thing for. It doesn't have to be Forex. Just, Forex just is a lot easier for me. It just makes a lot more sense to me. It's just a lot, makes the most sense to me, really, compared to stocks. Stocks are a lot more complicated. It's just, buying and selling currencies, and you just use this Wyckoff, use accumulation, use smart money techniques that you could pick up from learning these classes actually, and you can become a better trader, and that can be in any market. Is there any, if anyone trades Forex here, would you want me to analyze any pairs? Not just New Zealand yen. I just prefer this pair the most, but I do anything really. We can look at gold if you want and do some analysis there. Gold also, by the way, is an indicator of the US dollar, of its strength. So when gold is moving up, this is defined as the US dollar moving down. So now when gold's moving down, the US dollar is moving up, obviously. Can you compare bear trap and reversal? Oh, that's right, that's right. Okay, so bear trap, right? We had, I actually want to show you in this market because that's this one that we had. This was a bear trap right here. Because if you're a smart money trader like we are, right, and we know how the market moves, a little funny thing is people who trade stocks say Forex is hard, and people who trade Forex say stocks are hard. About that, and the funny thing is that, okay, first let me answer Jorge, and I'll get to that. So this looked like an accumulation, but it wasn't, because this trapped people in, right, before delivering higher prices, made a run for liquidity, trapping in sellers to then what? Take prices higher, grabbing their stop loss orders, right? Before coming down here, giving you a secondary test, filling in some of this imbalance, but then ultimately moving down, giving you a secondary test, convincing people that this is not going to reverse and move up higher, right? Because you're saying, oh, it came down to this resistance, right? You're seeing this resistance line being held. Oh, it's coming down to this resistance. It's not going to keep going down. This is where it's going to jump up, right? It starts to move up. Oh, let's buy. You buy when the market moves up, and then what happens? Takes your stop loss, just starts moving down and down and down, ultimately to the lowest absolute low that we had here. And now it's starting to accumulate, and now it's moving up. So that was an so this was not an accumulation. This was a reversal, a sudden and abrupt reversal, which are actually very rare. Price doesn't usually do that, but it can do that. And this is exactly what happened. Was there anyone to anticipate this? Could you have known? No. There's nothing you could have done. There was no strategy for this. It's just a matter of greed. You should have gone out at this low. You should have taken the money and been like, that's okay for me. If it goes down lower, I'm happy. I'm just happy I made this money. That should be the attitude. You know, always happy that you closed what you did. So this was a bear trap, right? This was how market engineered liquidity to grab your orders before. So even though you were selling here and you were right to sell, because this was the correct sell, as obviously the market moved down, look how price came to grab your order before moving down and moving against you. I'm turning on the fan. Give me 1 second, please. It's really hot in my room. Okay. So that was a bear trap, and now let's show you an accumulation. What is this? Bro, mute please. I can't hear you with that dude's. Okay, let's see. Yeah, actually, I should mute everyone. It's very loud, actually. Where can you I don't know who that is. Can you tell me who it is? I can't see here. I'm not good at Zoom. I'm just not a make the call, and I wish I was better at it. Who is it? Not me. I'm kind of new. Mike Wee. Okay, thank you. Sorry, Mike. Oh. Okay, I'm on mute. I think he's already muted. Okay. So yeah, okay, that's a lot better, even for me. So now let's continue. So that was a bear trap. I want to show you an accumulation. This was not a good example. This is actually a creek to stop out liquidity before moving up. So it was like a kind of a fuck you accumulation, which is not something that you can trade. I mean, you can identify it, but it's kind of like a fuck you. You know, it's not really like a, oh, this is a tradable schematic. This is like a go fuck yourself schematic before moving up price. Like there's really nothing you could do for this one. Yeah, it just sucks, man. Straight up, it just came, grabbed your order, and then moved up. And I saw this yesterday happen, and I was like, wow, this is disgusting. And I stayed away from this one. But and you know, we see the trend line being manipulated on the higher time frame. Oh, here could be a nice accumulation. Actually, this seems like a perfect accumulation. Actually, yeah, this was a perfect accumulation. This was a golden example of Wyckoff. I want to show you guys this. You had the preliminary supply, the seller's climax, automatic rally, secondary test, secondary test of the automatic rally, secondary test, up thrust, the move down, the spring move, launching prices up higher, lower points of supply, last points of supply, markup, the creek, engineering liquidity, stopping people out, people taking the money, taking the sells, the grab of the liquidity, and those high prices being met. This was a perfect example of an accumulation right here. And we go over that more in depth in the mentorship. So I'm not going to spend so much time because there are people who pay for this. So it's not fair to give it away for free, everything. So that's an example to show you. And now someone asked me a question earlier. You asked me, the funny thing is you didn't ask, but you made a statement. I actually want to talk about that. Here's the thing about stocks, right? Again, I'm not a stock hater. I have stocks. I trade stocks myself. Well, I have investments. I don't trade actively stocks, but I do have investments, and I appreciate the stock market. Nothing against it. I'm sure you guys make money with it with options and from the group. Again, not cheating on anything. But the thing about stocks is that you have the PDT rule, right? And not everyone has $25,000 unless you want to trade in a cash account. At that point, you're more susceptible to losses, and any losses you incur are on you, not the broker. The broker doesn't give you leverage, blah, blah, yada, yada, right? All the stuff, all the disadvantages of a cash account. So if you have to use a margin account, we can't use a margin account in stocks if you don't have $25,000. So you can't day trade shares. So what's the next best thing, or / the only thing you can do is trade options. Now, I actually learned about options, right? I took a class one time with Evan. I used to watch his classes too, just like you guys, learn from him about how options work. I learned by myself, and I'm like, wow, this is so complicated. All the theta decay, gamma decay, whatever, I don't even know, all these Greeks, right? You have to learn about all this, how the strike price works. You have to get the correct expiration dates. If the market never reaches your strike price, then you pay the premium. You're paying theta decay, right? I mean, you still have the delta that kind of evens that out, but like you're basically you're renting a stock that may not even reach the intended price. And if it doesn't reach, you get boned. That just seems so risky to me. Like, I don't know. And then if you want to get like a day trade, you have to pay such a hefty premium on the option. Like, why do you have to go through all that headache? Like, Forex, you don't have to put down all this money. You can day trade with any amount that you want. Like, you can risk any amount and just either exponentially multiply it or lose some of it. Let's say I put $100 risk. The most I would lose would be like what, $50-$60 because I use risk management. And then the most I can make would be like $200-$300 a day. I mean, it's not a ton of money. It's not like $3,000 a day. Some people are doing that with options, but the losses are so much smaller and the wins you can make are like, it just, to me, is so much better. I just don't understand why people shit on Forex, like it's for people who work a 9 to 5 and they don't want to trade, during the day. They want to trade before their job, after the job, or even during the day. You can still trade intraday and do this, I don't know. That's just me personally. That's what I think. I could be very wrong. I could be missing out on potential gains. I'm good at Forex. I've been pretty profitable with this. There's no reason for me to move to stocks, That's just what I think about that, in my personal opinion. I pay though. Yes, but that's part of the primetime trading group. This is the Forex section. Technically you're paying, and the classes and stuff are included in the VIP, but like to actually learn more about the trading methods I use and like actually gain that market knowledge, you can keep coming to these classes for free. But if you were to gain like that individual one-on-one session where you actually learn and shift your knowledge into a new direction, like that would be in the mentorship, which is like currently in operating right now. But that's something beyond prime time. That doesn't have to do anything with prime time. Because I'm not being paid as an analyst. I do this for free, actually. I don't get paid to do these classes. So for me, I have no incentive / no obligation to do these classes. This is just for me to get to know you guys and give you guys, some material and be more active in the group. But overall, yeah, I mean, the mentorship is really where I would have any sort of benefit. So that's for me, I'm looking to help you guys. So if I'm looking to help you guys as well and put time aside from my day and, make the course for you and, be there for you and show you market examples, blah, 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 all that stuff, like that would be, incentivized for me to bring you on to the mentorship and give you all the tools necessary and available to me to help you become a better trader. But I don't want to talk about the mentorship right now. I want to just focus on the market. That's all I have to say about that. What's this? What did you say? Why can't I open the chat? Oh, I'm new. I thought you were a member of the group. Yeah, I'm part of the group, but they brought me on just to like, just for really mentorships and, help out people who are looking to trade more. I don't actually like, I'm not actually, yeah, I'm not being paid for this stuff, so it's really just from my own, what's the willing, like my own will to help others is the reason I'm doing this. They don't pay me for these classes at all. But yeah, I want to talk about the larger scheme of the market and show you guys how/why we really knew that this would happen. We looked at the monthly to start off the day. Where is the information? Okay. So the monthly, right? We had opening day. We had the beginning of a red candle. Now, to me, I thought that we could get some lower prices because we're really moving bullish for so long, and volume started to die down a little bit. I thought that it seemed possible that we could take a sell. Obviously, the monthly is not the best time frame to use because it's kind of like, it's like I gave an example to Marcos today. It's like you're watching a football game or a soccer game, whatever. He likes soccer more, so let's say soccer. You're watching a soccer game in the stadium, right? And you're sitting all the way at the top, like the top row. You can still see the game, but you're so far away. If you're sitting in the front row, you can see everything a lot better. So you want to zoom in on the market and really see what it's doing, right? That's the ideology. Okay. So again, we were opening up today with a red candle. We got, look how small this is, right? This move is what the entire move, this 30 pips that we caught today was this. It's insane. So again, now we're getting some bullishness. Amazing. That's awesome. I hope this thing keeps going up. But today was a red day for this market. So we took shorts and we were very seller bias on this, bearish. Also on the daily, we're starting to see this down candle. We were like, okay, this thing looks pretty good to continue this move down. Obviously, we did get the move down and the continuation of that. Now it's starting to move back up. That's fine. We already made our money for today. And then we looked at the 4-hour, right? The 4-hour was giving us this kind of weak trend line. And this is where we really drew it on. You see, this is where we started to draw it on the 4-hour. We're starting to see this trend line being manipulated. So we expected the continuation of those manipulations to grab those final orders of liquidity resting below here, and basically this whole thing. This was the big move that the news we had on the RSA release. I think it was a bank statement from the Bank of Australia, or I think it was actually the Bank of New Zealand. I'm sorry. They gave us a good positive news for the New Zealand currency, the Kiwi, right? And we actually got a boost in price and actually brought us up to this all-time high, which is phenomenal. Well, not all-time high, but like, the last like year, really, this was an all-time high. So again, we had a manipulation of the trend line. So we were expecting lower prices to be met. Apparently this line was a very significant line. I guess it looks like this was an order block that we had here. This was the body of the order block. This was the top of it, really. So this was I guess, significant level that the market came to respect, mitigate half of this order block that we had up here that was never really mitigated. Well, we had a slight mitigation here. We had another retest of that mitigation of the same order block here, and then higher price being delivered. Even looking at the 4-hour right now, these are very weak bearish candles, even though it's going bullish candle, sorry. Even though it's going bullish right now, yes, I agree. Maybe it could continue giving us something like this. I'm not too sure. I don't want to say anything right now because I'm not really analyzing this to the full extent. I could, and I probably should, but for now, I am expecting to see potentially a down move because, as you guys should know by now, you can't just leave a big move like this unmitigated. I think the market's moving up before moving down, and this sell is what I'm looking to get involved in. And I think this might happen in the next, actually tomorrow. I think we're going to be looking for a very nice sell opportunity. And we're going to alert this, but this could be like this mitigation. Wow, this is going to be like 100 pips. If that's going to be like $1,000 from 100 type shit. Like you could put 100 and you make 1,000% return. Literally. If we catch that move. Nice. Soccer, lol, yeah. Yeah, very nice. If we get that move down, look, we can measure it. Let's say we get this fill of this mitigated order all the way down. Yeah, the 100 pips. Even continued below Imagine we took a beautiful sell, 153 pips. Yeah, you could make a ton of money. That's what I'm looking at, and I really expect this to happen. I hope it does. I would be the first one to take the sell there. 1 hour is showing us a rounding bottom, right? Which is a bull sign. But I think really, again, going back to our 4-hour analysis, I think we're gonna have a rounding bottom, a continuation of price to reach this equal high, which was the exchange of weak to strong hands, come up to test and mitigate this final order before continuing in this market down that we had up here with this distribution. So we're gonna get this move up, maybe even a little bit, maybe even now, and just take out all this liquidity, everyone buying, just shit it out and fucking drop all the way down and just grab all of these orders of everyone buying this market since down here. Just grab those orders, and that drop is going to be beautiful as this liquidity is making the move up before the continued move down. So am I still bearish on New Zealand yen? Yes. Could it move up and fuck with me and be like, nah, bro? Of course. But is that the risk we're willing to take in order to make 1,000 pips? Well, 100 pips, but like, you know, $1,000, whatever. Yeah, of course. 100%. You'd be stupid not to take this trade. If I were you guys and you have a Forex account or you're able to trade Forex, this is going to be, if this drop happens, this is going to be like probably the nicest trade I've ever done in my entire career. This drop. I actually caught this move up from down here. We entered a buy at the top of this accumulation. So you can imagine this was like my best trade. This was like 120 pips. So that was my best trade. So now the move down is going to be even better. So I'm really looking for that. You know, I'm really looking forward to that drop. I'm really actually been waiting for it kind of all week. And I really thought we we're going to get it today, but I know that we're going to get it by tomorrow or in the next 2 days. And I'm really waiting for that to happen. I can't wait for it. It's going to be amazing. 30 minutes, yeah, no, basically 1 hour. 30 minutes is probably, I don't want to be mean if anyone's just 30, but probably the most useless time frame, as it serves no distinction between the 15 and the 1 hour. It's just like it's like when a parent has 3 kids and that's just the middle child, and it's just like the one that gets no love. You know, that's kind of exactly how it is. Why are stocks harder than Forex? Bro, I literally spent like 10 minutes explaining why. And if you really want, you can watch in the video that I'm going to post. I'm not going over that again. I'm sorry. It's not fair to anyone who will actually listen. Hope you understand, man. Nah, that's good. I'm not mad. I'm just saying, like, bro, you know, I did answer that, and you can just watch in the video. I'm uploading it after this call, so you can really watch it. And I left for a minute. Yeah, you're good. It's no problem. Just watch it after, man. Watch the video. You know, always good to watch these videos again and learn from the market master. Jokes. But nah, but definitely, like I said, looking forward to that drop. And in terms of what else do we want to look at? I think that I don't really know what else. I forgot before you messaged me that I was saying something. Does anyone remember what I was talking about? I think I wanted to make a point there. I kind of forgot. I guess it wasn't that important. You guys want to look at some tickers? Maybe I can, you know, on stock tickers. I can do some analysis on that as well. Again, this stuff does not just work on Forex. I'll say that like for the 4th time. It works in any market. Really, it really does. But if not, then I'll just talk about, you know, FX. Yeah, I mean, that's basically it in terms of what I wanted to talk to you guys about today. Okay, WPG and Workhorse. Okay, let's see, Workhorse. Okay, let's see. Workhorse. What broker should I use for Forex? Okay. So Forex brokers, I would recommend. Wow, that spread 6.5 pips or ticks, whatever. Is that normal for stocks? Or is that because it's after hours trading? Or no, there's not even after hours. It's just not moving, right? I don't even know how this stuff works, man. Is 6 pips a six? What's it called? Ticks, right? Is that a lot for stocks? Like, can anyone answer me that? If you guys, I don't know. That seems like a really high. Like I have a 2 pip spread for me, like at the maximum. For me, it's 2 pips. So 6.5 is like pretty really high. And by the way, to answer your question, Jorge, it depends on what you're looking for from your broker, and it depends on if you want to use a regulated broker or not. If you use an unregulated broker, then you can make a lot more money using higher leverage, but you have a risk of the broker kind of stealing your money. Not all of them are gonna steal your money, right? Not all of them are scam brokerages, but it is something you have to be careful because they're not regulated by the U.S. government. There are brokers regulated by the U.S. government, but those offer you less. As a liquidity provider, they offer you less leverage. They give you higher spreads. They give you sometimes commission trading, which is high commission. So you're paying for that luxury of knowing your money is safe and secure. You can deposit and withdraw through your bank account. It's really easy. For that regard, I would recommend Owanda. Owanda is a decent broker. They're not the best. I'm looking to switch to Hugo's Way. They're probably the best recommended unauthorized broker that I can really recommend for you. I'm looking to switch my broker. Owanda forever. Wow, Evan is in the call. That's crazy. Haha. Yeah, but Owanda is nice, but again, they offer such low leverage that I'm looking to make a lot more money than $400, $500 a day. So for me, 50 to 1 is a little bit too low. I want to make a lot more money. So if you're using a broker, as 50 to 1 is the highest Owanda offers, if you're using a broker like, for example, Hugo's Way, which offers you 400 to 1, you guys can imagine already. And also, Owanda can't trade US 30. You can't trade gold. You can't trade silver. With Hugo's Way, you can trade any commodity. You can trade any currency pair. There is no restriction, and you have a way bigger leverage usage as well as tighter spreads. Now, here's the thing about leverage. If you don't know how to manage your risk, leverage can destroy your account. There is risk involved with using high leverage. I don't recommend it. It just means you can take bigger positions. At the moment, I'm totally okay with using 50 to 1. So I'm staying with Owanda, but I will once I become, once I get a bigger account size and stuff and start making like really nice gains, like on a monthly level, then I'm gonna switch brokers to a more, bigger and potentially higher revenue source, because Owanda is just not able to give you that higher revenue that you're looking for. Unless, of course, you have like $100,000 minimum to trade, and then the spreads and it doesn't matter because you have such a high margin account. And margin is stuff we're going to talk about later. That's stuff that's actually for free. I talk about that. I don't want to talk about all that stuff now. That's stuff that we can go over later. Let's talk about workforce though. Using smart money techniques. What is it, a 30-minute? Wow, this is a terrible stock. Just look at that. Look at these liquidity gaps that never even got filled. This is a very illiquid pair. Very low levels of liquidity. Look how, and this is on a 30-minute. I would expect the 1 minute, maybe. This is just so many gaps as orders were not being able to get filled. It doesn't even come in to fill it. Again, this stuff does work, but you can see manipulation, right? You had this move down. People were selling, it moved up, grabbed their orders. People are buying, moves down, grabs their orders, starts to move up, right? Low levels of volume. This is you could say a cup and handle, whatever. I don't use that stuff, but you had this kind of rounding bottom move up. A lot of gaps. I honestly, I think this is like a very, I'm gonna mute whoever that is. Who is that?
But I could be trying to hammer in
Oh, I
nails
see.
with my.
Yeah, man, super loud. Let's keep going here. So this was a very, very illiquid pair. I'm sure you guys can trade options on this and make, money from that. But, in terms of like really like day trading it using that strategy, I mean, you could use the smart money techniques. You do have some Wyckoff. Let's see if we can spot some Wyckoff actually. We can see this is a distribution right here as we had this move up. Let's actually examine that. We had this move up, right? We had the preliminary supply, the bias climax, automatic rally, secondary test, then move down, secondary testing that again, then move up. We had this spring move giving us a kind of higher price, but then this was ultimately manipulated, resulting in this crash, grabbing all these orders of people going long. and then just these terrible. Wow, this is such a terrible stock. Like, I'm sorry, just such a terrible stock. You guys have any other suggestions? Who's not muted? Benjamin, mute your mic. My brother, yeah, thank you. Yeah, this is a very disgusting stock. I really would not recommend for anyone to trade this, and it's just decreasing. And actually, it looks like this could actually, let's see, let's look at the volume. We're seeing that this is actually creating a creek. And actually, you know what? We can't talk about this. Look at this. Look how my concepts are still being taught in the stock market. Here, for the guy that said fuck Forex, look here, my friend. Fuck Forex, right? Listen to this concept now I'm about to show you. This was the buyer's climax, the seller's climax. We had the preliminary supply up here, right? Then move up, automatic rally. This is such a manipulated market. Wow, I'm actually shocked. Such manipulation. Do you guys not see this? Look at this upwick candle. That's such a manipulative. That's a stop hunt. And then like a move up. And then look at this. What are these manipulations? This is why I don't like the stock market. I mean, the Forex market is not as manipulated as this. I mean, wow, look at that. Grab of liquidity and then, wow, that's the definition of a fake out. That's literally the definition of a manipulation candle right there. These two, I would stay very far away from. Wow, that's such manipulation. What is this? Piton, what is this? Data contract, they lost. Piton, WPG, say it's muted, not WPG, hedge funds. I don't know what this is, hedge funds, composite man goes by many different names. This stuff is just manipulation, very plain and simple. We had this move down again, the pin bar rejection. This was the expansion of price. I guess you could have caught this with the MACD or whatever. I don't use that stuff, but you could have used it. You had this, higher prices being met. You had this creek, which is and why? How can you identify a creek? And this is what I want you guys to take note of. And this is stuff that I use all the time. And creeks happen more often than not. This is a very common pattern. You see this descending wedge or the descending channel, whatever the fuck you guys call this shit, okay? You see all this stuff going down, right? And look how low the volume is. Look how low it is, how it's slowly going down and down and down. What is happening here? This isn't a downtrend. It's engineered liquidity for the market makers to be like, oh, you want to take a sell here. All the RSI, all the stochastic is telling you to sell from up here, right? Okay, we're going to take your orders, screw them over, stop everyone that's taking a sell here out, and then bring you higher prices with this terrible, disgusting liquidity grabs. And again, so really manipulated pair. I would not recommend for you to trade this. Let's move on to the next couple of tickers you guys wanted me to look at. You guys said Piton, WPG, or Evan says not WPG, hedge funds. I don't know what that means, but let's look at Peloton. Peloton from Nasdaq. Okay, let's look at it. Obviously, I'm doing this for you. I don't trade stocks, but again, you can look at any time frame. You can look at. I wouldn't look at the 1 month. Again, just doesn't give you that much information. You can use the 1 month, and you should for larger institutional orders, but the 30-minute, 1 hour is really optimal in terms of analysis for the daily intraday swings. Stuff like that. I would really recommend using that. What is this? What's the chat? Hedge funds. I mean, are you looking for stocks or Forex? I trade Forex, as you know, Evan. We've discussed this also, but the stuff that I teach and apply also works on any market, including the stock market. It just happens to work, in my opinion, the best on Forex because, it's just more liquid and less manipulated because, this is this terrible looking stock with all these gaps. It's, you can get slipped. This is the definition of getting slipped. Look at that. Let's say you have a stop loss right here, right? Whatever. You just get screwed over by the broker. Wow, that's insane. Really. Indeed. How about FCX? It's trending copper mining. What is that? Oh, that's it. Okay. I don't mind to look at it. Basically, right, we had this move down, right? We could have seen this by this redistribution that we had. Yeah, this actually was a redistribution as we had lower prices. It looked like an accumulation with price doing, wow, this is really disgusting. Wow, really? Wow, look at this manipulation. That's insane. This liquidity, this is so illiquid. I'm sorry, I'm just not used to seeing stuff like this. So yeah, we had this move down, we had this accumulation, we had this move up. I guess this was the up thrust. Then for lower prices to be met. Now notice, we never really had that spring move. We only had the seller's climax. We had then, what's it called? The consolidation of price, a fake breakout, which was the up thrust, getting people. This is a Wyckoff redistribution model right in front of you. And you again, this isn't forex. This is stocks. This is market moves in any time frame, on any pair, on any stock, on any futures contract, whatever you want to look at. This works for anything. Okay, so you had this up thrust for it to then move down, retest, continue moving down, not giving you any indication of market value or market direction. Sorry. So you're saying, wait a second, there was no spring, there was no demand for higher prices. We had this initial move down, and price never failed. Price failed to continue moving up. This isn't accumulation. This is a redistribution. As we came, people taking the sell, dumb money taking the sell too early, getting them stopped out, engineering liquidity for then people to buy this market, for that to then what? Fuck you over and grab your orders, because that's how the composite man moves. He doesn't play for you to win. He plays for you to get stopped out. He engineers liquidity for you to lose. It's like when you're playing blackjack or poker, or whatever. You're playing against, or not poker, but you know, when you're gambling, right? You're not playing against odds. You're playing against the casino. You know, most of the time it's in their favor. Like 86% of the time, you're gonna lose. You know, like you're not gonna win. And the few people that win is because legally they have to have some winners. But most of the people are losers. They live off of people losing. Same thing with brokers. Owanda, for example, is not an ECN. They're a market maker. Okay, that means they have a dealing desk. That means that they have risk management. When you make money, they lose money. Okay, because they keep their trades in-house. Okay, they don't actually apply. They're a good liquidity provider, but they don't put your trades actually in the market. When you open a trade on Owanda, the broker takes the trade against you. They want you to lose. So the second that you stop trading like blindly and using dumb money concepts like trend lines and Fibonacci retracements or whatever, or using like alligator indicator, awesome indicator, or whatever the hell, you know, stochastic, RSI, whatever, none of that stuff is going to work for you, because that's how 75% of people trade. You know, like, what do you expect? Think about it for a second logically. And if you're using an algorithm, right? How is an algorithm going to make you money if everyone and their mother has an algorithm? Everyone buys an algorithm. They think it's so hard to get. You can get one for $1,000, and it's not going to work for you. I can promise you that, because it doesn't know how to identify the composite man's moves. Only a human can do that. And that's where the thinking comes in. Unless, of course, you have some kind of ultimate robot that can do all that stuff. I mean, I know of indicators, of robots that can really, you know, like Wall Street robots, super powerful. You know, those work because they're the ones moving the markets, but still. But the algorithms are designed to target liquidity. They view liquidity pools, they engineer liquidity to then take it out, you know, give you another creek, low volume, engineering liquidity, convincing dumb money to buy here for them to then what? Move down and stop you out again. You guys not see the pattern? Isn't it obvious at this point? I mean, again, that's why I'm so confident in what I'm telling you, because I know that this exists in Forex. And look at all these gaps and stuff, right? Look at the difference in liquidity. Forever said, why is stocks harder, right? You asked Jorge. Look at the difference. Which one looks like it's such a nicer pair? Which one looks like an easier market to trade? Honestly, which one looks less manipulated to you guys? Which one looks like it doesn't have all these ugly again, same time frame, no difference. Both of them 30 minutes. Because Forex is so much more liquid. It's so much easier to trade. It's less of a hassle, less manipulation. Obviously, there's manipulation. There's always manipulation. Crypto is the most heavily manipulated market out there. That's why I'm very afraid of crypto. Forex is decentralized. That means only institutions are moving the market. So, you know, do your research before you guys say fuck Forex. I mean, you know, like, you're just the one missing out on knowledge and opportunity, man. That's what I think. You know, and I guess, Jorge, that answers your question. Again, I just explained to you why I would prefer Forex. What is this? Do you have a stop loss to enter a Forex trade, or will the system allow you to do so without a stop loss? Forex, got it. I don't know why Doris said Forex. Fuck stocks, LOL. No, not fuck stocks. Okay, I'm gonna show you guys the stock that I really love, that I've been holding on to. Actually, if Evan's in this call, Evan helped me with this one. He looked at this one and is like, yeah, I should hold it in our call. He helped me with my portfolio, actually. Got to give credit where it's due. Because I am a terrible, what is this? Fuck? Oh, I'm joking. I'm a terrible investor. I'm not good, but I entered at 576. That's all the way down here. and we have just been making so much money with AIV, and it's just been super bullish. This is probably my best performing stock that I own. Since I bought from all the way down here, we bought this entire move up. This thing is just totally bullish. You're gonna keep going up. Again, I don't want to say buy because that's super illegal of me, but I really love this stock. And again, super manipulated, obviously, of course, whatever. But I mean, the gaps are not that much like the ones you guys were seeing it. It's a pretty small cap stock, and it's just been really performing really great. So for me, it's like, obvious my best investment that I have at this point. Also, and now we can also look at Doge if you guys want, this current up move, right? This was again, look at these volumes. It's just so disgusting. I really don't like this pair, but we are going to see now an increase. Why? Because we had this creek, the manipulation of the trend line. Now, again, another creek here with lower volume being met. Well, actually, you can't really see it here, but you see how that's a little bit lower, right? Flatlining, and then kind of, well, actually, don't look at the volume. This is not, I can't even use this. Okay, don't look at the volume here. Just ignore it. You see this creek manipulating, moving down very slow, right? Very, up, down, zigzag, zigzag, zigzag. This is, it's called in smart money creek. Elliott wave calls it the 1, 2, 3 of the end of the Elliott wave. Whatever the hell you want to call it, at the end of it, you expect higher prices not because of Elliott wave and you're just following a system blindly. I don't want you guys to just follow stuff blindly. I want you to actually know why things happen. LOL, AIV timeline. Yes, AIV is a very good stock. What time is it actually? I think we might be done here for today. I can't see the time. Oh, because this thing is blocking. 9:02. Yeah, so we're gonna end the stream. I only go for an hour here. If you guys enjoyed this and are interested in learning more, then please send me a private message. We can talk about enhancing your ability to trade and teaching you more about this stuff. I'll be here throughout the week. The best way to set up stop is the trade. Oh, yeah, you asked me a question. The best way to set up your stop around where the trade setup breaks down. So previous pivot or channel break in the opposite direction. That's also very true. That's a very strategic. That's actually, you guys should listen to Evan. That's a pretty nice stop idea. I personally, not to be like mean, I just don't believe in stop losses because you kind of reveal where your position is to the broker. And as we both know, the broker comes to grab your orders before moving up. I just have mental limits in areas where I know that at that point, it's a lost cause. Like when you're playing chess, if you guys have ever played chess before, when you're playing against your opponent and the opponent just grabbed your queen and you just grabbed your rook and you're in a losing position, you just resign. So it's kind of like that. If you're kind of in a losing position and there's no way out of it and you're starting to see it's going up against you, I just exit the trade for a small loss. I de-risk along the way as we start going in drawdown, then I add risk back on later. And, if that starts to happen and, unfortunately we lose the trade, obviously I hope not, knock on wood, but, if that does happen, then we just exited a small loss. But I personally, like I said, it's kind of like training wheels. Once you know how to ride a bike, you don't need to use the training wheels anymore. I'm not saying don't trade without a stop loss. I sometimes do use stop losses. It's really depending on how I feel / how I can manage my trade. Really up to you. But yeah, I guess using pivot points, using order block rejections. Like this was an order block right here. I put my stop above this order block and then let it ride down. And yeah, basically on the 30 minute. I would put my stops. Actually, we did put our stops right here above this area as price came to purge our liquidity and then move down. We had our stops up here and we just really rolled this thing down. And then, you can trail your stop, move it 10 pips above, as it starts moving down, whatever. You can do however you want. It's really up to you. But again, me personally, I don't use it. Doesn't mean you shouldn't, just means that I don't use it. To answer your question as well. Thank you. Good night. Is there one tomorrow evening? Yes, support, resistance, supply, demand. Yep. Support and resistance are not the same thing as supply and demand. People think that they are. They're very, very different and do not mean the same thing. Support and resistance are the only reason I use support and resistance is to see where dumb money is placing trades and then go against them. Really, to be totally honest with you, I don't use support and resistance at all. I use order blocks. I use refinements. I use fibs to measure those refinements. I use smart money liquidity. I use institutional order flow. I use supply and demand zones. I use liquidity gaps, volume profile. I use all those stuff. All smart money techniques. I don't like to use support and resistance, as I find them very outdated. But yeah, that's gonna be it for today. Just to wrap up the stream, like I said, if you guys want to see more of me and get the course and, you know, really like start to develop your own smart money techniques, message me privately. I'm open to helping you guys. And yeah, that's gonna be it for today. Hope you guys enjoyed and take care. See you guys in the next one.
The money was flowing
Oh,
in,
that's ended.
and he was spending all
There
the
we go.
time